Interest rates are up again. That's a 1% increase in just 2 months. But what does it all mean? Let's take a look. So the Bank of England today have just announced that the interest rate is going up by another 0.5%. So we're now sitting at 2.25% for the Bank of England base rate. But what does that mean? Well, for savers, it's quite a good thing because they're going to be getting a little bit more on their money. But in real terms, because inflation is so high still, their money is still eroding. Now, for homeowners, we've got mortgages which are going to be going up. If you've got a variable mortgage, we're going to be seeing quite a bit of an increase on the average house. So for the average homeowner, they're going to see over £500 a year extra in their mortgage payments. And with predictions that interest rates are going to go up again by the end of the year, then we're just seeing things being squeezed more and more and more. However, a lot of the problems are not being caused by monetary problems. It's being caused by supply issues. So until those start to solve themselves with the war in Ukraine, with supply issues from China, etc., until those really settle down, we're not going to start to see inflation coming down either. So the Bank of England are a little bit behind the curve with what they've been doing to try and solve this, but also it's not the only thing which is going to start to implement it, because households have already curbed their spending. They've already squeezed as much as they probably can. They're going to have to continue to do so. So from an investment perspective, what does this mean? Well, we're going to see the same increases in mortgages. However, when we appraise a project, appraise a property before we buy it, we would always tend to factor in a decent interest rate, at least 5%, to make sure that we're still happy with the deal if interest rates were to ever go that high. And guess what? We're getting there. So if you've gone and squeezed the deal to make it work, then you're going to be starting to feel the hurt. However, if you've done a really good job at looking at the property properly, then you know you've got that flex to be able to take a little bit of an up and down in the interest rates. So for us, it's a short-term pain, which is offset a little bit by increased rents, but over the long run, these interest rates will settle down. So it's a bit of short-term pain for long-term gain. But we're still happy, we've still got cash flow in properties, they're still positive, and I would suggest that whenever you look at doing an investment, that you factor in a decent interest rate between 5 and 6%, and then and only then do a deal if it works for you. So I hope you found that of value. If you liked what you heard, then don't forget to hit the like button and subscribe so that you can get future updates for when we put out any more information about anything to do with the market or property investments. So in the meantime, thank you for watching, and I'll see you in the next video.